Every week there are stocks that make really massive gains. We're talking 100%, 200%, even more in just a few days, and sometimes in just a single day. Well, these stocks are quite predictable. They have cycles that repeat over and over again. And in this video, I'm going to show you these cycles and how to take advantage of them to profit in the market. Whether you're a day trader, a swing trader, or a position trader, if you understand the cycles and what's behind them, then you can be a better trader and take advantage of these big swings. So, hot stocks move through these predictable cycles. And the key thing to understand is that normal people typically fail to take advantage of the cycles. And the reason is because normal people succumb to fear and greed. Fear causes them to miss the buying opportunities, and greed causes them to buy when the stock is running up too quickly and likely to make a pullback. So in order to consistently profit with hot stocks, you need to understand the cycles. And the first is surprise. I'm going to show you these things on a chart in just a moment. The second is doubt. And the third is confidence. So if you understand these three cycles, then you can pick the right entry points. Now I'm going to draw a picture which will show how this works, and then I'll show you in a chart of a stock that did really well this past week and how that has unfolded. All right, so let's draw a little picture here. So typically a stock is boring and quiet. So it's trading quietly, and then it has the surprise, a strong break to the upside, a strong percentage move, and the volume will typically jump on that as well. So this is the point when the stock is surprising the market and it is becoming an alpha stock. Alpha stocks are those that trade on their own story. They have some significant fundamental events, some news release, maybe rumors in the market, and it causes the stock to make a big jump in price. Now, the people that cause the jump, the people that buy aggressively, are those who follow the company very closely and typically get the information, the new fundamental, exciting information, before most people. Now, the problem is all of the people that own the stock into that surprise jump, well, they don't always know what caused the price jump. So you can imagine if you own a stock and then one day all of a sudden it's up 20 or 30%, that's a powerful motivator to take some profit. You just made quick profits in a short amount of time. And that's what causes the doubt phase. And that's where the stock will go into a pullback, and that creates the next opportunity. So buy opportunity number one is the surprise. Buy opportunity number two comes when you break the pullback. So you're breaking the doubt. You've got this little pullback of profit taking from the people that own it before the surprise, and then you break the pullback as the people that know more, the people that were buying here at point number one, they start to buy aggressively again, and that causes the break of the doubt. And that'll put the stock into the next upward trend. And then typically the stock will go into a pattern of compressing volatility. So what happens is the market is a war between buyers and sellers. And if the buyers are winning the war, price is moving up. If the sellers are winning the war, price is moving down. Well, there's times in the trading of a stock when the buyers and sellers sort of come to agreement about what the company is worth. And that's this cycle of compressing volatility that I show here on the chart. You can see that I can draw a line across the bottoms and a line across the tops. And the fact that those lines are converging toward one another tells us that there's not a lot of price volatility here compared to over here. So over here you have uncertainty, and here you have confidence. And when a market gets confident, when the buyers and sellers agree about what the stock is worth and it's trading in a narrow range, then a subsequent surprise break from that is a clue that there's some new information about the company's future that justifies people paying a higher price. So you get that break from confidence, that break from low volatility, and you start the cycle all over again. It'll go up, there'll be doubt, which is pullbacks. There'll be breaks of the doubt, which is a buying opportunity. The stock will go into a compressing volatility pattern, and then the next surprise happens. So if you understand these cycles, you can do really well in the market. If you want to learn more about this, we're going to look at a chart now, CAPR, and really drive home how this comes into play. So this is a stock that did really well in the past week or so. And I'm going to highlight this point right here. This is when the stock started to behave abnormally on the 23rd of September. It was kind of boring and quiet. And then it triggered what I call an action candle. This is my own indicator. And it measures statistically significant abnormal price movement with statistically significant abnormal volume. It's a clue that there's something going on that has excited the buyers and caused them to act, to come into the market and buy. So that's our surprise. That's buy opportunity number one. Now then you see the doubt right here. You see this little pullback. That's these people doubting the strength and selling into that strength. And then there's the break of the pullback, and that leads to the next big move to the upside. Now that move right here, I'm going to blow up the chart a little bit and go a little farther into the future. That was this right there. And what I want you to notice is that we go into that cycle again. There's the upward move, the doubt, and the break. The upward move, the doubt, and the break. And then the stock goes into a cycle of compressing volatility. I can draw a line across these bottoms and a line across these tops, and I can see that the volatility is compressing. So we have confidence here. Here we had uncertainty. It's bullishness. It's buyers in control, but it's still uncertain. That's why price is changing a lot. Here we have compressing volatility, and then look, a new surprise, breaking from low volatility, and that starts the next leg up. And then you've got doubt and a break of doubt, and we'll see if that continues to show strength into next week. If you find this valuable, I would encourage you to check out some of the free webinars that I'm doing in the month of October. So if you go to stockscores.com, which is my website, and you go to the home page here, on this homepage, if you scroll down to the bottom here, you'll see there's a bunch of events. I'm going to dive deeper into how to read charts. And so register for those. They're free. They're 45 minutes to an hour long each, and you will learn a lot. If you want to get on my weekly newsletter, which is free, it's emailed out to you, just click on that See More link, and you will learn a little bit more about that particular newsletter, which comes out by email on Mondays. And it's a deep dive into trading tactics and stock picks, all kinds of things around my methodology in the market. And this stuff is all free. Of course, so is this channel, so make sure you subscribe. If you like this video, click the like button. It helps to get more views. And as always, trade well.